It's a Friday, the 9th of April. I am hosting Amofaye, and this is your Frontier of the Bell. Thank you very much this morning, everyone. My panelists, Ali Kansacho, the CEO and founder of Rich Frontiers Management in Nairobi. Thank you very much for coming through. And Luke Ufojebe, who is the head of equity research at Petiba Capital Management. Thank you both for joining on the show this morning. Let's hit the ground running. We're expecting a few more folks to join us on the show. This is how the 5 key African exchanges, securities exchanges closed on Thursday. Nigeria got a second soft green numbers, still holding below the 39,000 level. The Ivory Coast all-share index, or the composite index, crossed to 141 new level by about 0.2%. The Egyptian market was stronger by about 0.75%. The Kenya market was down 1.26%, and South Africa JSE soft around 67,053.97. Let's get a few stories around the East African corridor with the IMF latest loan facility to Kenya still grabbing the headlines and the front pages across the news media in East Africa. One in Kenya about job cuts and the tax hike. That is what the issue Ali will try to unpack for us, because the state-owned entities also need their own rescue money, 36 billion Kenya shillings. Where would this money come from? Kenya's Nairobi Securities Exchange is the best on the sub-Saharan Africa year to date, about a 4% in US dollars and Kenya shilling terms, led by Safaricom. And Zambia, Lafarge and Dangote Cement are in hot waters with the authorities, the Competition Commission, over anti-competition practices. And my telecom shareholders have said, go ahead with the refinancing plan of the debt and the infusion of further funds, a few millions of dollars by majority investors. Smile Telecoms operates in a number of African countries, including Nigeria. Ali, let's hit the ground running with Kenya, this IMF story and the state-owned enterprises.
Yes, so as you know, the IMF have come through with a 3-year package totaling about $2.4 billion and are giving an immediate disbursement of about $300 million. We also discussed a few days ago, there was a tremendous pushback on social media by people, and even at the IMF spring meeting invaded the Twitter feed, complaining that the IMF was wrong to be lending money at this time to the government, basically saying the government had not been responsible and had borrowed a tremendous amount of money, and therefore, you know, lending more was not what these folks were for. And in response to that pushback, the IMF said that if they did not make these facilities available, Kenya would face job cuts and a tax hike without aid. So the positive thing has been that there's been a tremendous conversation around this, but make no mistake, without the IMF's intervention, Kenya would be seriously challenged in terms of, debt repayment, the debt service percentage as well. So a lot of debate going on. And then I saw this morning that Kenya's also applied for a loan from the World Bank as well. So when you take it in that context, I think, these announcements just crystallized what was increasingly apparent about Kenya's debt trajectory. The IMF characterized it as a high risk of debt distress, so basically justifying their intervention. Now, in that proposal from the IMF, there was a discussion around how much money was required to support state-owned enterprises, and the figure that they came up with was 36 billion shillings, which is about $350 million. But let me say this, Kenya Airways, which is just one state-owned enterprise, is requesting exactly that amount. So the actual amount that is probably required is considerably higher than what's been allocated so far. You've got challenges at Kenya Power, You've got challenges of other state-owned enterprises which will need more support and balance sheet repair going forward. So I think let's not mince our words. You know, this is a very challenging moment for Kenya. 2013 through today, Kenya quadrupled its debt. And essentially, the investments that were made on that borrowed money are producing so far negative returns. And that's essentially the challenge. The IMF, it looks like in that proposal, the heavy lifting will be done by an increase in VAT in terms of tax collection. And this is fuel where Kenya had previously agreed to impose the full VAT on fuel and then only pass through half. And so there will be considerable unhappiness if fuel prices rise from these levels because of tax. Just to mention that.
I get it. It's going to be a whole lot of time. The whole issue, tax and all of that are all part of the conversations coming through from the World Bank, IMF spring meetings as well. How much of this will be a burden to developing countries who are taking loans and debts in? Then again, you have to increase tax. Thank you so much, Ali. Let's say hello to Uchenna Minis, who is the managing director at Harris and Minis Investments, is part of our team this morning. Good morning, Uchenna. Welcome to the show. Good to see you on the show this morning, Uchenna Minis. Thank you so much. Let's talk about the Nigerian space. The whole issue, and Ali will get back to that Zambia story of cement war, anti-competition issues between Lafarge and Dangote Cement that is happening in East Africa. Here in Nigeria, it's about BUA, Dangote Sugar, and Flour Mills face off over local sugar production markets and the refinery belonging to BUA Sugar or BUA Group. That's a whole lot of this. Are three of the largest consumer goods companies in Nigeria. Luke Ojebe will give us some sense of that from Vertical Capital. Shell says it pays about $3.2 billion to Nigeria in taxes, royalties, and fees for last year. And it looks like the central bank is investigating a number of companies. 11 bank accounts have been freezed on the court order, which could be extended after this initial freeze order. There are no further details of what the central bank is doing, but it looks like one of the banks in Nigeria is involved in these particular transactions, which are Forex that the CBN is looking at. ETI has a new Group Executive Operations and Technology, Tomise Fashioner, who came in from, who's in the bank, but who had very wide experience, about 30 years of banking experience across frontier Africa. And Presco is proposing 200 Kobo dividend cash for 2020. Burkina Faso says it's raising 8 billion CFA funds in stimulus bonds so far this year within the UEMOA market to support this West African fragile economy. Let me start with you, Luke, in terms of the BUA Cement and this competition issue among these three big names on the Nigerian board in the sugar consumer goods space.
Thank you for your question, Bosin. So really what's going on is the likes of Dangote Sugar and Flour Mill are coming out to say that so the question of a refinery, of a sugar refinery by BUA is against the sugar master plan that the government is working on, because they believe that that will lead to more importation of raw sugar into the country. And that's really not the plan in Nigeria, really, because the plan is to actually boost the production of raw sugar in Nigeria. But I don't think that's really the case here, because I mean, starting a sugar refinery doesn't really translate to higher demand for raw sugar from our neighboring countries, because we can actually produce this raw sugar here. I think we should focus more on boosting raw sugar production from sugar canes, from different farmers in key states in the country. If that happens, then we shouldn't really be so bothered about companies starting sugar refineries in the country. So I think it's just a matter of time before this bitter war will off completely.
The little that I'm aware of was that over the last couple of years, both Dangote Sugar and Flour Mills had been working with the Ministry of Trade and the National Sugar Council during the Obasanjo's and Jonathan's administration towards local production. They've acquired thousands of hectares of land between Kogi State and Kwara State to plant sugarcane and do this backward integration. These two names during Aganga, when Aganga was the Minister of Trade and Industry, and I was part of a whole lot of these public meetings and with the National Sugar Company Development Council in Nigeria over there. So then BUA was not at the meeting in the loop. So perhaps Dangote Sugar and Flour Mills are saying, look, we pioneered this whole thing. We did the first level of investment. We tried to reduce it. Now, maybe we need to go back a little bit into recent history to find out how the whole sugar backward integration program actually started, to see where these two big companies are coming together to say, look, BUA Sugar, we think what you're doing is incorrect. Why are you doing this and all of that? I think we may need to just go a little bit dig more into that to really find out. But I am aware that they make the first move to spend so much billions in acquiring those. And I don't know how far they've gone with those issues, by the way. But again, these are three of the biggest companies in Nigeria. And sometimes fights comes out when you come out of when they start very big, tough wars. Okay, Uchenna, this is where we are right now with the global market space. And from all the indications, it looks like the central bank is not done with investigations for foreign exchange malpractices. What's your take on this very quickly? Good morning.
Good morning. Yeah, I think right now the central bank is caught between the rock and a hard place when it comes to foreign exchange management. There are a lot of arbitrage opportunities, loopholes, and for me, I think it comes to a point where the central bank needs to choose its battle wisely. You can't chase every rabbit in going into the hole. You wouldn't catch anything, you know. So I think it needs to prioritize key leakages in terms of their intervention processes and try to focus on that and leave the smaller, should I say, loopholes at the moment and try to manage what they can manage, because I think for them, when it comes to their policies and their implementation, they're just here and there. And for me, you can see, I know this is going to sound funny, but right now, so yesterday, I was hearing in the parallel market rate that the exchange rate was already going north of 500, 434, 503, 504, you know, and this is the reality on ground, you know. And when you start to look at this, you realize that things are not getting better when it comes to these policies and protocols that are being put to checkmate the devaluation of Naira against the USD also.
Okay, thank you very much. Ali, very quickly, let's get to you on this story in Zambia, between when the authorities are pulling the ears of Lafarge and Dangote Cement over anti-competitive issues.
No, just to contextualize the Zambian situation, of course, we've got an election coming up imminently, which will be quite close and contested. We've got discussions with the IMF where Zambia is spinning them more positively than the IMF, and the overall view is that nothing will be achieved before the election is held. And we've had really a good rally in the copper price, which has supported the Zambian economy in a very difficult situation. Zambia has taken a much more proactive, aggressive stance in terms of its regulatory scenario. You saw that with some of the mining companies where they forced one of the mines to give back the license. So I think Zambia is seeking to make its presence felt here again in the case of Lafarge and Dangote. We'll have to see how this develops. Obviously, they're saying that they are colluding in terms of setting prices. But, you know, Zambia has been a very difficult economy to price in because of the volatility of the currency and the input prices. So I think, you know, Zambia's got to be careful not to push people away. We know the Chinese have probably the biggest presence in sub-Saharan Africa within Zambia of all countries. But, you know, this is a very activist approach that Zambia has taken. The proof will be in the pudding.
Yes. Luke, thank you, Ali. Very quickly, Luke, when you look at this ETI story, getting a new executive director in charge of operations and technology, what do you think ETI is looking to achieve with this, making technology is at the heart of everything right now?
I think that the reason for that is not far-fetched, because since late last year, even mid last year, a number of these banks, made it known that they are looking at tapping into some fintech operations just to diversify their business, and also to generate more income from fintech operations. Really, we saw the likes of GT, Access Bank, Sterling Bank coming up with this holding structure. So that way they can be able to maneuver their operations around the rules and regulations of the CBN and be able to start their fintech businesses. So I think what ETI is doing here is also in line with that trend we've noticed so far. And that makes sense, really, because looking at what these banks are posting in their reports, you can see that there is already a declining trend in their interest income due to the fact that the CBN is trying to keep interest rates low in order to spur economic growth. So on this basis, these banks are just on the lookout for other business ventures they can actually dive into. So I think that's what ETI is also doing at the moment. But we just need to highlight the fact that, of course, these companies are going to face competition from the likes of already existing fintech companies like PiggyVex, Cowrywise, and a couple of others. But given the fact that they have large infrastructure base, for instance, GT Bank, their last investor call, they mentioned the fact that they have the capital. They have the capital to actually go into the payment business, even though the server for the payment business can cost about 3 billion naira per annum. The bank clearly stated that they have the capacity to manage that business. So we will see more of that trend play out across the banking space, because clearly interest income is declining, non-interest income is declining. So it just makes sense to look at other ways to generate more income for their business.
We appreciate your comments on that in the banking space. Thank you, Luke Ufojebe at Vertiva Capital. Let's go to Southern Africa, and I'm asking Uche Naminis to weigh on this. South Africa is Africa's #1 emerging market, but when you look at manufacturing output contraction of 2.1% after the whole lockdown has been relieved a little bit and reviewed, then that's seemed to be a blow below the belt. South Africa is also looking for money fast and furious, and is getting a second $1 billion loan from BRICS. Well, that's the Brazil, Russia, India, China, and South Africa's package, which was put together just a couple of years ago. South Africa wants to create jobs fast and furious. Now is looking for money as well. South Africa was the second Africa best at 11% year to date in dollar terms, according to online reports led by Resources. Earlier, Kenya was the best by 14%. There's a bit of a typo there, error. Apologies, everyone. That Kenya was the #1 year to date by at 14% in dollar and shillings terms. JSE Group is the second best at about 11% year to date in US dollar terms. Anglo American says it's demerging the thermal coal operations by June. That's in South Africa, while the IMF is forecasting Botswana and Namibia to grow 8.7% and 2.6% this year. Let me check with you first, Uchenna, on South African story. These big advanced economies seem to be grappling with a whole lot right now.
Yeah, boss. So I think we should not forget the fact that we are currently coming from one of the most unprecedented pandemic in recent modern history, and there is no playbook to mitigate around this, really, and for us, for individuals and market participants, I think it's important that we understand that these risks are are sort of novel, and to mitigate and to compensate against it require fresh ideas and basically a lot of spitballing, and I think that's the case here. When you look at how some analysts have look to forecast economic activities, should I say during vaccination programs, they just get to miss the fact that these things are not exactly black and white, right? It's sort of gray, and that's what we're seeing with South Africa. That even with South Africa, there's a new variant that is kind of taking them aback in terms of their vaccination program, and that in itself is a key risk that other should I say, global institutions are looking at and saying, well, there is still the risk of having variants that would be resistant to the vaccine that are already created. So what do we do going from there? And that's what you can see with OPEC to try not to be too accommodative in terms of increasing their production costs and try to take precautionary measures. So I think that's the case with what we're seeing with South Africa in terms of their manufacturing output, in that we are not exactly sure. We are not exactly out of the woods at the moment when it comes to this pandemic process.
Thank you, Uchenna. Ali Kensacho, are you in tune with the IMF with this about 8% of GDP forecast this year for Botswana, the home of diamonds, and 2.6% for Namibia that is just still struggling with the IMF discussions that is still on the table?
So I think in Botswana's case, you've got very joined up policy making, and you've got the opportunity for a strong rebound. And I think I wouldn't question that particular prediction. Namibia's case is slightly different, because if you look at things like credit growth, that's around 1 or 2%. It's been in the slow lane. It was in the slow lane before the pandemic hit. So I'm not so convinced that Namibia will be able to get to 2.6% this year. I think they're going to struggle to reach that number. Just to follow on from some of the comments just made before, yes, the South Africans were the driver of the virus numbers in Africa. The numbers have come down considerably, less than 1,000 daily infections. Of course, there was the start. AstraZeneca was found not to be effective against their variant, according to the South Africans, but now they seem to have ordered Pfizer. If you look at what happened with Pfizer in Israel, the numbers have absolutely cratered. So there is potential there for South Africa to vaccinate a great deal of its population and stabilize the economy. So I think they've got a sophisticated enough economy. They've got enough money to put to work from the likes of this BRICS loan. And also they're running a primary surplus now, because they've obviously squashed local demand and imports. So it looks to me a very interesting play right now. And that's why I think the Rand has been pretty strong at around 14.50.
Thank you so much, Ali. Luke, this is Kenyan market running at about 14% year to date positive, South Africa at 11% year to date. Are you salivating here?
Really, for some of these markets, as you mentioned, we've seen more of like positive trading in these key markets, unlike Nigeria, where we've seen more of negative trading. And one of the reasons for this is that we have increased foreign participation in these markets compared to the Nigerian markets, and that's due to the foreign exchange risk. So a number of these foreign investors are still a bit worried about the uncertainties around foreign exchange rates in Nigeria. I mean, also given what they experienced last year, a number of them could not exit the Nigerian markets as when planned. As a matter of fact, some of them are still stranded in the Nigerian market, so they've diverted their funds to the fixed income markets, waiting for when FX will be available so they can easily leave the market. So because of the absence of foreign investors in the market, we've had more of domestic investors participating in the stock market. And for Nigerian domestic investors, the thing about them is that most of them are not long-term oriented. So these are investors that like to take advantage of short-term gains. So anytime the market goes up for like 2-3 tradings, 2 to 3 consecutive trading sessions. The next couple of trading sessions, you start seeing more of profit taking, so the market begins to go down. So we've been seeing that pattern play out since the start of this year, and the reality is that we are going to see that pattern play out through the rest of the year, because you see the domestic investors that are driving sentiment in the market.
Well, thank you so much. Let's finish off with the north of the continent. As always, what's this latest story about Fitch saying Egyptian banks face further pressure from the virus fallout? We all thought that by now they were beginning to step out of that. The Sovereign Fund of Egypt and EFG helps one of the largest financial services group in the North African economy moving to acquire AIB. Of course, we all know how small and illiquid the Algerian stock market is. So 64.8% decline in volume of trade last year was expected within the full-blown pandemic period. Ali, let's wrap it up with you on the North Africa. What do you make of this Fitch report on Egyptian banks?
Well, I mean, I was a bit taken aback because, you know, Egypt grew last year. I think it was the best performing country in terms of GDP. They kind of came through that pandemic relatively robust. A lot of money was thrown at them, as you know. So I think this is a bit behind the curve of Fitch, frankly. I think, you know, this is in the public domain. We know that there's been pressure, but this is a growing economy with a lot of potential. And I think the Egyptian banks have shown themselves to be very nimble. So I think this is, you know, there are other banks I'm more concerned about more than the Egyptian scenario. Algeria, just to quickly touch on that, very illiquid stock market, as you said. And then we've had this massive rundown in foreign exchange reserves. At one point, they were close to $150 billion. They're less than 50 now. So, you know, it's been a pretty big challenge over there. I think they should look at more reforms in the capital markets in order to encourage investors into the country. I think the time is right.
That's right. Thank you so much, Ali Kamsacho, the CEO and founder of Rich Frontiers Management in Nairobi. Thank you for being on the show today, and have a great weekend. Uchenna Minis, the Managing Director at Harris Minis Asset Management Limited. Thank you so much as well for bringing your insight into the show this Friday. And of course, Luke Ofejepe, Head of Equity Research at Beteva Capital Management here in Lagos, Nigeria. Thank you, gentlemen. Have a great weekend. I'll see you next week. Bye for now.